Hey guys, welcome to Midweek with Indiacharts. This is Muskan Kapoor, your host, and we're joined here with Jay Vora, and we're going to discuss what the market has for us. We went through the Fed meet as we discussed last week, and we have some updates for that as well. So I'll quickly jump into the questions. So the Fed recently announced the 75 bip hike in the Fed fund rate, and there's been a little bit of volatility on the particular day of the announcement. What was your takeaway from this entire Fed speech and what really happened?
Right. So after it was announced that the Fed has hiked the Fed fund rates by 75 bips. So initially there was a reaction on the upside. Okay.
Correct.
Later on, when the press conference came and, Powell started speaking, that is where, eventually the market sold off. So what interestingly happened was that the next day in the morning, media started printing stuffs, saying that the Fed was dovish. So I and Rohit sir, we actually sat and we, heard the entire press conference twice. Okay, basically the Fed speech twice.
Correct.
So we had some key takeaways. So I'll just point out that. So see this whatever I'm going to speak is something that we have taken from the speech itself. It is not that I'm trying to make my own
Mislead
thing
or
or something.
anything. Yes.
Yeah. So these were the key takeaways which we found from the Fed meet. Fed Powell said that we continue to anticipate that the ongoing increases will be appropriate.
Correct.
Then he said that in addition, we are continuing our process to reduce the size of the balance sheet significantly. At some point of time, it will be appropriate to slow down the pace of increase as we approach the level of interest rate that will be sufficiently restrictive to bring down the inflation to our long-term goal of 2%. But there is a significant uncertainty around that level of interest rate.
Correct.
Even so, we have some way to go, and incoming data since our last meet suggests that the ultimate level of interest rate will be higher than previously expected. Our policy actions will depend on the incoming data and their impact of the outlook on the economic activity. Then reducing inflation is likely to require sustained period of below trend growth and some softening of labor market. The historical record cautions strongly against prematurely loosening the policy. So we will stay the course until the job is done. So these were the key takeaways.
Yeah.
And in that entire thing, I could not see any dovishness from the Fed. He has clearly stated that until the job is not done, this is likely to continue. Okay, the only reason I think the media cherry picked the line was this one, where it said that at some point of time it will be appropriate to slow down the pace, but they did not show the second half, wherein he said that but there is significant uncertainty around the level of interest rate. So earlier what had happened was they were anticipating that the Fed fund rate will go around 4.6 4.7 levels. Okay, so for that, what would happen, that one more 75 bips or a 50 bips hike and it would be it, and that would be it. But now Fed is telling that we don't know the terminal rate. Okay, and now the market is factoring in a terminal rate of around 5.25, which would mean that 250 basis point hike and a 25 basis point hike. That would be required for the Fed to reach towards a target. So this is right now obviously the expectation. We don't know if it is going to be there, but this is the expectation. So that means that we are still some time away from Fed pivoting or whatever narratives we are hearing from the media.
Correct.
So yes, so you can expect tightening in the coming days. And one thing Fed specifically said that the risk of doing less is lot more than the risk of doing more. That means that if the Fed, hikes, I mean, they anticipate that no, the economy is falling into recession, and they do less of the rate hike. And then what happens is that inflation still persists. Then, getting inflation in control will be very difficult. So they wouldn't mind doing a lot more than it is required, because they said that we already have the tool. Later on, they can always reduce the interest rate to fuel the economy. But if they do it less, then the risk is a lot more. So all the odds are suggesting that Fed is unlikely to pivot, unless unlike what the market is anticipating. Now, if you ask me that if the commentary was hawkish, and it never sounded that it will pivot, then why is the market rallying? So frankly, to that, the only answer is that it is the midterm election that is going on right now, and that might have triggered the rally. But that said, this week is going to be very interesting, because we'll have the result of the midterm election. And there will be CPI data, which might come in, which will, further strengthen. I mean, which will further let us know whether, Fed is going to hike the rate, or is there a chance of pivot. But, broadly from the Fed speech, it doesn't look like that, pivot or, pause of interest rate is anytime soon that we're going to see.
True. I agree. The Fed speech was anticipated in various directions, but yeah, a complete whole picture looks like this for now, and we'll see how it moves on. Moving on to the dollar, we had seen the dollar hike a lot in between. Now we are seeing it cool off a little. It's trying to settle in the past few weeks. What are the charts suggesting?
Yeah, so I'll just share the screen and I'll show you the chart. So yeah, see, this is the dollar. Yeah. So this is the dollar index chart. Okay. And so we had just put out this today in the morning itself. You can see over here that once, so this orange line, basically the light orange line, is the 20-week moving average. Okay. And you can see that once this 20-week moving average was crossed, okay, after June 2021, in this entire up move, this 20-week moving average was never breached. Okay. In fact, whenever it had come to retest this 20-week moving average, later on we had only seen bounce on, dollar index bouncing back and reclaiming this, reclaiming the previous high. So can it be different this time? I don't know. But, we would want a conclusive evidence for the dollar index to say that, it is sort of weakening, because otherwise this might just look like a regular correction. Okay. After an up move, there is a regular correction. And once this is done, once the correction is done, most likely it is likely to move higher. So now, other than the moving average, what is happening is that, as you can see, this trend line. Okay. Then this trend line, the falling trend line, all are converging around the same level. Okay. I think this level is somewhere around 108.60 or something like that. I had checked in my software. So broadly, if you say, then 108.60 to 108.90, that is sort of the lower end or the lower band, you can say, which is rock solid support for dollar index. Until that doesn't break, we would continue to assume that the dollar index is in an uptrend. And if the dollar is in an uptrend, then most likely it is likely to cause, some sort of trouble to the market. Right now also, we are seeing market cherish and all the equity index bouncing back and all, is because the dollar index is pulling back a bit. I think once this correction is over in the dollar index, there is a good chance that dollar index starts again its up move. And if that has to happen, then we need to see how equities behave. But right now, it is too early to, say that the dollar rally is, that the dollar rally is over, and, we are going to see a big bull market in the equities. So, we remain on the sideline, and we remain at a very crucial juncture.
Correct.
And it really needs to be seen that how things play out, because I will later on I'll also show you the chart of Dow Jones, okay, and how it is
Correct.
poised. And if you combine everything, then you will realize that everything is actually at a crucial juncture.
Yeah.
That it's about time that something big can happen on either side. And the guess right now is that the bear market in the equities is still on, and the bull market in the dollar index is still on.
Yeah. Correct. When you said something big can happen in near future, I can only think about our Nifty index, because everywhere, the news articles, my mindset, the media, everybody is talking about how it's India's decade. And maybe it can decouple now. Is it time to decouple? What are your views on it? While we're talking about this, I also noticed Bitcoin saw sharp knock. What is your take on that along with the Nifty?
So I think, yes, Bitcoin is very interesting. Wait, I'll first, talk about Bitcoin. So as everyone might be aware that, Bitcoin is kind of a sentiment indicator. Whenever it is up, we say that it's a risk on mode, and whenever it is going down, it is more like that the risk off period is on. So now you can see over here, earlier also in our videos, we have emphasized enough on the importance of the 40-month average. Okay. And over here, you can see the Bitcoin has closed below the 40-month decisively. Now, this entire is a consolidation. And now if you see on the daily chart, this consolidation seems to be breaking on the downside. Okay. And if this is happening, then most likely it should lead to at some point of time risk off sort of environment in the equities as well, because from the high that we are seeing, if you remember then all the equity markets, okay, mostly Indian indices and the US indices and all, they all topped out between October 2021 and December 2021, around that phase. If you see Bitcoin, it topped in November 2021. So more or less, they are sort of correlating with the equities. It is just that the speed of Bitcoin is lot more than equities, but directionally they are following each other. Okay, and now you can see a breakdown in the Bitcoin. So this is also one of the warning sign, okay, for the equities. And now, coming to the question whether this would be India's decade, can India decouple, etc. We have talked enough, but I'll once again, make an attempt to show people that how true is this narrative. So firstly, there is no doubt in my mind that this can be India's decade, because everything is falling in place for India, and India's fundamental has only strengthened over a period of time. So there is no doubt about that. Okay, let me be very clear on that. But can it decouple? Every time I hear this, I feel like, why people say that. So what I first do is that I dig into the charts, okay, and I dig deeper into the history. Because history is the only best guide, which can tell you that, can all this thing really happen? So see, right now, what is happening is that because the Nifty index has inched higher, almost towards the all-time high. So people are saying that, it might have decoupled, it is going to see a big rally, etc., etc. But, I just want to show the instances in the past, okay, wherein the highs were broken. But after it did, it also saw a very sharp decline as well. So it is not that a specific level is taken out, then everything changes. It never happens that way. Ultimately, you need those supportive fundamentals. Okay, when the fundamentals are supportive, it will fuel towards that direction. Okay, so what I mean by this is that, see, when the markets had fallen, okay, Fed was printing money left, right, and center. Okay. At that time, what people said was, don't fight the Fed. Don't fight the Fed. That was the only narrative which people were telling, because at that time, or at that point of time, the fundamentals were very bad. Okay. Because lockdowns were happening, economies were shutting down. The governments were shutting down their economy for a while, to get COVID in control. But Fed kept on printing money. The liquidity situation was very good, and that fueled the market. But is it the case now? No, it is not the case right now. Like I said, in the Fed's key takeaway as well, wherein they said that they are reducing the size of the balance sheet significantly, which means they are sucking out the liquidity. And that is never a good, situation for the market to be in. So see, I'll just show you few example. This I remember because we have also given this assignment also to the people who are doing in the mentorship. So you can see over here. See, there was a correction. Okay, the high was broken and then it fell. Okay, this I'm showing you on a very minor degree that is happening, because see, a high is broken, that doesn't mean that we cannot correct. Okay, the other, I think, example was somewhere over here. Yeah, it was over here. See, again, the high was broken decisively. It rallied for a few days and then again it faltered and it saw a correction. Now, this I am showing you on a very minor scale. Okay, this is actually true for the bigger indices as well. I mean, not the bigger indices. I mean to say on the bigger breakouts as well. So see, if you see the Sensex chart, but I'll take the white background because many of the people had requested for white background. So yeah.
Okay.
See, if I do the monthly chart and if I do the log scale, can you see over here, there was such a big consolidation.
Yeah.
Okay. What happened was the Sensex actually broke out from this multiple resistance level. Okay. From there, from making the high of somewhere around 6150, it corrected almost to 2,594.
Yeah.
So almost a 50% decline, even after breaking the high. Okay, even after breaking the high. Now I'll give you one more example. See, can you see this? This was the 2000 high.
Yeah.
Okay, which was broken only in 2006 after 6 years. After 6 years. Okay, it rallied a bit, but eventually the 2008 scene happened and it corrected. So the basic point what I'm trying to make is, even in the Sensex, if you remember, there was a Nasdaq bubble over there. Okay, that Y2K bubble, what we say. And when the bubble burst, things went haywire. And this is what happened over here as well. So the main point which I'm trying to make is that this is one of the reasons why we are not fixated to any levels. Okay, when the macro changes, when the fundamental changes, we will change our view. But right now, the fundamentals are not that good, what the price action is telling us. There are certainly a lot of risk that is involved. Now, coming to the point of decoupling and, all of that, which a lot of news articles are also printing. So, I was literally scratching my head on Sunday. Okay, and I was thinking, क्या ऐसा सच में हो सकता है? So, like I said, I went in the past. Okay, and then I removed the data. And I was checking that you can see over here, see these vertical lines are when either of the index, okay, either Dow Jones or Nifty index have formed a peak.
Got it.
And later on they have corrected. Okay, so you can see at this point, Nifty index peaked. It was going down, but the Dow Jones index was flat, and eventually it fell.
Yes.
Okay. Then, in 2008, you can see Dow Jones was the first one to top out. Nifty only, I think, topped out after 2 or 3 months.
Yeah.
after 2 or 3 months. Till then, Nifty was continuously inching higher.
Mm-hmm.
Okay. You can see over here, the Nifty index stopped first, but the Dow Jones kept on moving higher, higher, higher. And eventually, when the correction was unfolding in Nifty, the Dow Jones eventually catched up on the downside. Okay, same was the case over here. You can see that it was a big sideways movement in the Dow Jones, whereas
Correct.
Nifty was correcting,
Yeah.
and eventually it fell. Okay, the same was the case over here, prior to COVID. And in
Yes.
fact, in COVID, I think almost both the indices topped out around the same time. Okay. Now you can see over here that the Dow Jones Nifty index was actually the first one to peak out. Okay, that was in October. But Dow Jones peaked out only in January of 2022, early January of 2022. So over here as well, there was a lead lag. But now what is happening is that it is correcting, but Nifty is turned sideways. And when I
Yes.
see in terms of phases, it looks like the 2000 phase, but the inverse of that. Nifty is actually outperforming and Nifty is behaving like Dow Jones. And the Dow Jones, the Dow Jones right now is behaving like how Nifty was doing it in 2000.
True. Yes.
So that is why I want to, put across my point that
Hmm.
you need a fundamental support. You need a supportive fundamental for the markets to see a rally. What happens is that when all the markets follows the trend. Okay, like supposedly if Dow Jones is an uptrend, then it is not that Nifty will keep falling. At some point of time, even it will go up.
True.
But it is the rate of change that matters. See over here, Nifty had made a low of around 1,000. Okay, let's take it for simplicity 1,000, and it had rallied all the way to 6,200. That was almost a 6 times move.
Yeah.
But if you see in Dow Jones, okay, it made a low of 8230, and it rallied all the way to 14,000. So it was not even 100%.
Yeah.
So essentially, this was also an uptrend in Dow Jones, but it is the rate of change that matters. Okay. So when we say outperforming, underperforming, it is this. It is the rate of change. So at this point of time, like I showed you, the Nifty index went up 6 times, but the Dow Jones index, it barely moved 70%. Okay. But
so Nifty is
eventually,
currently outperforming, but we don't know if it's in the decoupled stage yet.
Exactly. So the point I'm trying to make is that it cannot decouple. It can outperform on the way down. Okay, that is certainly true. It can outperform on the way down, but it won't be like Dow Jones is falling and the Nifty is moving higher. I had also showed the chart last week as well. That what is happening? Basically, the inversion of yield curve. The inversion of yield curve have almost 100% track record, of indicating that a recession is likely to come. And if a recession is likely to come, then you can see markets correcting. Obviously, a recession means a slowdown, and slowdown in the economy will lead to correction. So right now we are at this point of time, and when I see all of this happening, okay, see, if I have to holistically understand what is happening, the Fed is tightening. Okay, the balance sheet is reducing. There is an inversion in yield curve, which has not played out yet. So all this is telling me that the direction of the Dow Jones might still be on the downside, and it may have not reversed. If the direction of the Dow Jones is on the downside, then can the Nifty index reverse? The history says that it cannot reverse. Now, can Nifty outperform? It surely can.
Definitely, yeah.
But like I had pointed out in the last week as well, when this consolidates, there is a higher chance that the one which is outperforming might correct a lot more. Because see, at this point of time, you can see that Nifty was over here. Okay, Nifty was over here. And after that, Nifty only fell this much, but Dow kept on falling. In fact, then this outperformance was leading to an underperformance wherein Dow Jones was making lower lows and the Nifty was actually making higher lows. So all this can definitely happen, but the major point being that it cannot remain disconnected. The rate of change will depend on the outperformance and the underperformance, but it cannot really change the direction. I mean, both of them cannot move in a different direction. So yes, that is the main point I wanted to make, because I see a lot of narrative nowadays that decoupling and all of that.
So thank you so much for joining in and giving us so much of your knowledge, telling us how there's a difference between decoupling and outperforming, and how media was talking about things. They might be right to an extent, but this is also what is happening and what we should look at. So we'll see you guys next time. So we're not going to be doing a video for the next 2 weeks, but we will see you guys soon after that. Jay, do you want to add something?
Yeah, so I'm actually traveling for next 2 weeks, so that's why we won't be able to do the midweek. But soon, when I'm back, we'll be back with this show.
Thank you so much. Thank you for joining in.